Alright, so this video is about income tax. So everyone in Ireland with an income, with wages, with salary has to pay income tax. Alright, I'm going to just go through a couple of examples working out how much income tax someone has to pay and then how much of the salary they get to keep after that income tax is paid. And then I might just go through then a couple of things which won't come up on our course that you might have seen maybe in business studies or elsewhere. Okay, so first example here, Barry earns €1,800 per month gross. He pays tax at the standard rate of 20% and his tax credits are €300. What is Barry's monthly net pay? Okay, so he earns 1,800 per month gross. Gross just means before you take anything away from it. Okay, so before we start taking tax away from his income. Okay, so that's just what that word gross means. That's before you take something away. He pays tax at the standard rate of 20%. I'll get into that standard rate at the end of the question. And his tax credits are 300. I'll tell you what to do with them in the question. What is Barry's monthly net pay? So net means after you've taken something away. So he's got 1,800 income gross. So before I take tax away, I'm looking for his pay then net. So after I take the tax away. So he earns 1,800. He pays tax at the standard rate of 20%. So I'm going to take this 1,800 and I'm going to get 20% of it. That's my first step. So €1,800 multiplied by 20%. So that'd be 0.20 is 360, or else 1,800 multiplied by 20, and then the percent button gives me 360. All right, and this €360 is called gross tax. Okay, and I need to just learn this word here, gross tax. I'll come back to it again at the end of the example. So Barry has to pay €360 tax. He would have to pay that if he didn't get these things called tax credits. Okay, tax credits are like a discount off your tax bill. So your government gives you these tax credits, which are like a discount off your tax bill. So instead of paying €360 in tax, we are going to take those credits away. 360 take away 300 is €60. Okay, so 360 there is the gross tax. My answer here. Take away the €300 credits, leaves me with 60, and that's called net tax. Okay, so this net tax then is also called tax payable. That's what he actually has to pay, is the €60 per month. Okay, so he's earning 1,800 gross. He has to pay €60 in tax. How much does that actually leave him with then? 1,740. Okay, and that is the net pay. How much money he actually gets to keep, also called his take-home pay. So maybe just because that's my answer, I'll just put a euro symbol on that. So 1,740 is his monthly net pay. I'll just put the kind of words in here. Okay, so it is his monthly gross income by 20%. That gave me gross tax. The reason I call it gross tax is it's because it's before I take away credit. So gross always means before you take something away. So gross tax before I take the credits away. After I take the credits away is net tax. Okay, or as I said, you might also see that called tax payable, how much tax he actually has to pay. All right, and then gross income take away the net tax is how much money he actually gets. Okay, so tax is something you have to pay, so it's taken away from your income. So 1,740 is what he ends up with. Okay, the reason it mentions a standard rate of 20% is in Ireland we have two different rates of tax. We have a standard rate and we have a higher or marginal rate. So kind of in reality, he might pay some of his income at 20% and some of his tax at about 40%. That doesn't come up on the junior cert ordinary level course. Okay, so you'll only ever be asked about this 20% rate. Okay, you won't have to worry about two different rates. Okay, that'll come up in real world, it'll come up at leaving cert, but at junior cert level you don't have to worry about that other rate. There's also other things that can be taken away from your income. Okay, so you also have to pay another tax called the Universal Social Charge, or USC, and another tax called the PRSI. Okay, again, they're not coming up on our course. Okay, so in real life you'll need to pay these other two taxes. At leaving cert you'll have to learn how to calculate the two of those, but at junior cert ordinary level it is just income tax and at this 20% rate that we need to be able to deal with. Okay, so that's first one. I'll do another example then. So Elaine has an annual gross income of 34,000. She pays tax at the standard rate of 20,000, or sorry, at 20%, and has tax credits of 3,200. And here the question is broken up a little bit. Calculate her gross tax, net tax, take home pay. Okay, but that's just the three numbers I hit in my last example anyway. So gross tax is just your gross income multiplied by your tax rate. All right, so it's how much you'd have to pay if you didn't have these tax credits. All right, so 34,000 multiplied by the 20% tax rate is 6,800 euro. Okay, so income multiplied by tax rate, first thing you do. And as I said, that's called gross tax. And that's the first thing I was asked for. This is how much tax you would have to pay if you didn't get these things called credits. Okay, we're told Elaine has credits of 3,200 euro. Those credits are a discount off her tax bill, so we are going to take them away from her gross tax. So her tax would be 6,800, but she gets these things called credits. They're a discount off your tax bill, so I take those away. So 6,800 take away 3,200 is 3,600. And that's your net tax. So gross before you take something away, before you take the credits away, net after you take the credits away. So that's your net tax. So her income is 34,000. She has to pay tax of 3,600. I'm asked then for her take-home pay. So that is just the 34,000 income she has, take away the tax she has to pay. So her 34,000 income, take away the tax, the net tax, the tax payable. And what's that equal to? 34,000 take away 3,600 is equal to 30,400, and that's net pay or take home pay. So it's exactly the same as the other example I did. It's just annual instead of monthly, so the numbers I'm dealing with are a bit bigger, and it breaks the question up. This one just wanted the net pay, so just the final answer, but I have to go through all these steps anyway. This one broken up into a few different parts, so there's my answer 1, there's my answer 2, the net tax, and here's my answer 3, the take-home pay. Okay, but again, any example you're doing, any question you're doing is going to be income multiplied by the tax rate. Okay, so income multiplied by that percentage, that gives me gross tax. You then take the credits away. Okay, so those tax credits are a discount off your tax bill. So that answer there take away the credits, that gives you how much tax you actually have to pay. So that's the tax you have to pay over to the government, the revenue commissioners. So you take that away from the gross income. So the 34,000 that she started with, take away the 3,600 tax she has to pay, means that's how much she actually gets to keep. That's kind of the money she can spend then after she's paid her tax. Okay, so that is income tax.